At one point this weekend, you said that Bitcoin, and this was based, you were asked, Charlie said Bitcoin's like rat poison.
Hey guys, welcome to our channel. We have a treat for you today where we discuss what Morgan Stanley has to say about Ethereum outperforming Bitcoin. So make sure you subscribe to our channel and tap the bell icon to receive notifications when we release new videos. We all know how ever-changing and dynamic the crypto universe is, where there are no guarantees and the odds can change at any moment. Now we all have been watching Ethereum take over Bitcoin's performance since the beginning of this year. Even though Bitcoin remains the most popular cryptocurrency in the history of cryptocurrencies, Ethereum has more market value at the moment, and its position has just been backed by Morgan Stanley's support. Morgan Stanley, for those of you who don't know, is a leading multinational investment bank. The company, founded in 1935, is a global leader in financial services. Hence, their support towards Ethereum is a real game changer in today's fluctuating economy. Everyone who's been following the trends of Ethereum and Bitcoin are puzzled. How is Ethereum, a relatively newer cryptocurrency founded in 2013 and often considered an alternate coin, is overtaking the world's most famous cryptocurrency that has been around for 12 years now? Why is this happening? Morgan Stanley has given a few reasons for this surprising trend in cryptocurrencies. First of all, Bitcoin has only experienced a 38% rise in its value, while its rival has gone up by 240%. Experts who have been watching these ups and downs seem to have predicted this, considering how volatile the economy is. Bitcoin experienced a peak in April at $65,000, but went right back down to around $30,000. Ethereum, on the other hand, shot up in May at $4,000 and fell back to $2,500. These numbers might have caught your eye because of the huge gap between them. Yes, the market capitalization of these two cryptocurrencies are drastically different. Even though Ethereum has a much lower cap, its trading volume experienced a sharp rise in May to $600 million in May, which Morgan Stanley has stated is 60% higher than what Bitcoin has experienced so far in 2021. Now, we already mentioned that Ethereum is considered an alternative coin to Bitcoin. Why is that the case? This is because Ethereum underpins other cryptocurrencies. However, despite Ethereum's apparent popularity, it is not commonly used by private institutions like Bitcoin is. Morgan Stanley's intervention in cryptocurrency is not a surprise to the world. In March 2021, they announced that moving forward, they would offer their biggest clients access to cryptocurrency funds. This made them the first U.S. bank to dive into this market. This decision was informed to their financial advisors in an internal memo circulated within the company. The company launched access to 3 funds that let their wealthiest clients own Bitcoin. 2 of these are from Galaxy Digital, founded by Mike Novogratz with a minimum of $5 million investment. The third one is a combined fund from asset manager FS Investments and Bitcoin company NIDI with minimum investments of $25,000. Reportedly, this decision was brought about by huge demand from their stellar clients. The catch to this new venture is that only clients with at least $2 million in investments and Morgan Stanley can access this feature, taking into account the risk factors that come along with investing in cryptocurrencies. Morgan Stanley's competitors like JP Morgan Chase, Goldman Sachs, etc., have made it abundantly clear their unwillingness to venture into cryptocurrency. The official Morgan Stanley report reads, affirming regulatory framework, deepening liquidity, availability of products, and growing investor interest, especially among institutional investors, have coalesced at a time when the challenges to conventional cash, stock, bond diversification are rising. Our approach to cryptocurrency as an asset class should not be misconstrued for endorsement of any particular coin ownership. The report further went on to describe how exactly this decision affects their clients, especially in the post-pandemic economy. To the contrary, we see direct coin ownership, whether through private closed brokerages or cash app services, as still being in its infancy, with many questions yet to be answered about the achievability of low-cost best execution, central clearing, accurate and timely market data, and transparent and integrated custodial services. It was not until the 2020 COVID-19 pandemic that cryptocurrency's viability as a financial investment option for qualified investors was cemented. The report concludes, my own personal advice to people, stay away from it. That does not mean the clients don't want it. JP Morgan Chase Chief Executive Jamie Dimon said recently. Chris Kuiper, Vice President at CFRA Research, had this to say, we do believe Bitcoin, and more broadly crypto assets, are a new and emerging asset class that will likely be here to stay. CFRA expects the large banks, as well as smaller financial institutions, to continue to adopt them. particularly as the infrastructure and legal regulatory framework continue to be built out. Speculators and those suffering from FOMO, the fear of missing out, will surely continue to flock to cryptos in the hopes of achieving huge returns, said Ian Gendler of research firm Value Line, attesting to the growing curiosity around cryptocurrency, which explains its increased popularity in the last 2 years. He added, cryptocurrencies are only worth what the next investor is willing to pay. There is visibly a shroud of doubt over investing in cryptocurrency from many major figures in finance. However, a few institutions appear to be open-minded towards the idea and are considering introducing new ventures, perhaps inspired by Morgan Stanley's move. The Basel Committee, which is the centerfold of regulation among central banks, has introduced fresh rules that instruct banks to allocate capital for cryptocurrency investments. Gary Gensler, the current head of the Securities and Exchange Commission, cryptocurrency investors don't have full protections that they have in the equity markets or in the commodity futures market, alluding to the need for better protection against unforeseeable pitfalls in these ventures. The fact of the matter is that there's a growing debate on which cryptocurrency is actually a better investment. Despite the push Morgan Stanley throwing their hat into the ring gives Ethereum, Bitcoin is still a strong contender in the race. Ethereum has a shorter block time, with its transactions getting completed in a matter of seconds. While a Bitcoin transaction definitively takes minutes, they also use two different algorithms, with Bitcoin utilizing SHA-256 and Ethereum using Ethash. Ethereum was not even intended to be such a game-changing cryptocurrency at the time of its conception. However, its recent popularity has pushed it onto the main stage with a veteran like Bitcoin. What do experts have to say about this? When asked which cryptocurrency they would choose to invest in the next 10 years, this is what a few of them had to say. Peter Wall, CEO of Argo Blockchain, stated that both Bitcoin and Ethereum are significant contenders in their opinion. However, if they had to choose between Bitcoin and Ethereum over the next few years, they would choose Bitcoin. While Ethereum is the most innovative and has the most current use cases, Bitcoin is the most secure and has a long track record. Above all, they believe it is a fantastic store. Tali Greenberg, head of business development at All Nodes, was more of an Ethereum supporter, giving kudos to the technical advantages it possesses. She said that the Ethereum blockchain has a considerably larger technological advantage and utility than Bitcoin, which she believes investors are discovering. On the Ethereum blockchain, there are currently over $75 billion in DeFi projects, up from $40 billion just 30 days ago. Those who feel that DeFi will be in high demand for services such as lending, borrowing, trading, insurance, and monetary issuance should pay closer attention to the Ethereum blockchain. It's a network that allows smart contracts. Smart contracts alone have endless potential and should be enough to give Ethereum a competitive advantage over Bitcoin and its uses in our daily lives. She is in the Ethereum camp. Now that we know what the consensus is on this battle between Bitcoin and Ethereum, it is safe to say that both hold their merits. Even the most experienced cryptocurrency traders don't have a unanimous opinion on which one is stronger. Bitcoin, being the most popular cryptocurrency, seems to belong to be beloved by a large majority, which is understandable seeing it has been around so long. Ethereum is like an underdog whose rise we did not see coming. If it seems like it's hard to decide which is better, don't worry, you are not alone. A third expert is also the same position. Bitcoin's market cap as of last week has fallen below 50% of the crypto market for the first time since 2019 and is down over 30% overall since January. In our work with large institutions, we're seeing increased demand for Bitcoin and Ethereum as well as alternative coins. We believe institutional investors and corporate treasuries will hold on to both BTCs and ETH assets as their adoption and the market matures. Raghu Yarlagadda, CEO of Falcon, explained. That brings us to the end of this video. You already know we want to know what team you are on, Team Ethereum or Team Bitcoin. Let us know in the comments below. If you enjoyed this video, give us a thumbs up and share our content with your friends. Before you go, make sure you check out our playlist for more videos that you definitely will love. Thank you for watching and goodbye.